Welcome back to the channel. Today we're diving into 5 hot investments: Mustang Bio, Asset Entities, Wolfspeed, Elong Power, and the crypto Stafi. These picks span biotech, digital assets, semiconductors, batteries, and DeFi, each with unique risks and rewards. I'll break down the essentials, what they do, why they're on investors' radars, and what you need to know before considering a buy. If you appreciate deep dive, unbiased analysis, hit that like button and subscribe. It helps the channel and keeps this content coming. Let's get right into our first pick and see if any of these deserve a spot in your portfolio. Grab your coffee, let's break it down. First up, let's talk about Mustang Bio, ticker MBIO, a clinical stage biotech company that's making waves in the world of cell and gene therapies. Their focus? Tackling some of the toughest cancers and rare diseases out there using science that's on the absolute cutting edge. Their main bet is on CAR T-cell therapies, a revolutionary approach that could completely change how we treat cancer if it works. These therapies reprogram a patient's own immune cells to hunt down and destroy cancer, offering hope where traditional treatments have failed. The upside? It's enormous. Just one FDA-approved therapy could transform MBIO from a tiny player into a multi-billion-dollar powerhouse almost overnight. That's the kind of potential that gets Wall Street's attention, but the risk is just as big, maybe even bigger. Most clinical stage biotechs never make it to market, and a single failed trial or regulatory setback can wipe out your investment in a flash. The stakes are sky high. MBIO's stock is extremely volatile with wild swings on every bit of news, good or bad. That's typical for penny biotechs, where fortunes can change in a single headline. They're burning through cash at a rapid pace to fund their research with no profits anywhere on the horizon. The real question is, how long can they keep going before they need to raise more money, which could dilute current shareholders and send the stock lower? If you're considering MBIO, you absolutely must dig into their clinical trial pipeline. What phase are their therapies in? Are there any upcoming catalysts, like trial results or regulatory meetings, that could move the stock? This is less about reading technical stock charts and more about understanding the underlying science and the regulatory hurdles that stand in the way. You need to know what you're betting on. Financials look ugly: negative earnings, heavy cash outflows, and a balance sheet that's under pressure. The investment thesis here is all about future potential, not current numbers or profitability. This is a binary bet, either a huge win if they succeed, or a total loss if they fail. There's not much middle ground with a company like this. Conservative investors should steer clear. The risk is simply too high for anyone who can't afford to lose their entire investment. For risk-tolerant speculators, a tiny position, after deep research, might make sense. This is the kind of stock you buy with money you can afford to lose. Position sizing is absolutely critical. Treat it like a lottery ticket, but remember, your odds improve the more you understand the science, the company, and the competitive landscape. Study their investor presentations, listen to earnings calls, and compare their science and trial results to competitors. The more you know, the better your chances. In summary, MBIO is a classic biotech gamble. The potential rewards are massive, but so are the risks. It's not for the faint of heart. Only invest what you can afford to lose, and only after you've done your homework. This is a space where knowledge truly is power. If you want stability, look elsewhere. There are plenty of safer options in the market. But if you want a shot at a home run and can stomach a strikeout, MBIO is worth a closer look. Just be prepared for a wild ride. Remember, in biotech, the line between breakthrough and bust is razor thin. Don't chase hype, chase facts, and always keep your expectations realistic. This is speculation, not investment. Treat it accordingly, and don't let emotions drive your decisions. Know your risk tolerance before you buy. Make sure this fits your overall strategy and financial goals. Let's move on to our next pick. Next up, Asset Entities. Asset Entities, ticker ASST, is riding the metaverse and NFT wave, offering digital community management, especially on Discord. They position themselves as a bridge between creators, brands, and the fast-evolving world of digital assets, aiming to help communities thrive in virtual spaces. The creator economy is booming, with more people than ever building businesses online. If ASST can become a go-to for digital asset management and community engagement, there's real growth potential. But it's a crowded field, and standing out won't be easy. But beware. This is a micro-cap stock in a hype-driven, unproven market. Volatility and low liquidity are major risks, and prices can swing wildly on news or rumors alone. Their financials, likely small and inconsistent. Dig into their reports. Are they actually generating revenue, or just selling a dream to investors and speculators? Who are their clients? Are they working with real brands or just chasing trends and hype? The quality and stability of their customer base matters a lot for long-term success. Competition is fierce. Agencies, freelancers, and software tools all want a piece of this space. What's ASST's unique edge, and can they defend it as the market matures? Their fate is tied to crypto and NFT cycles. In a bull market, they could soar. In a downturn, demand could vanish almost overnight, leaving investors exposed. This is a venture-style bet. High risk, high potential reward, but a real chance of going to zero. It's not for the faint of heart or those seeking stability. If you believe in the metaverse and ASST's ability to carve out a niche, a tiny speculative position could be justified, but be honest about your risk tolerance. Do your due diligence, read filings, understand their revenue streams, and look for real-world demand. Don't just rely on hype or social media buzz. Don't get swept up in buzzwords. Focus on substance. Look for evidence of real traction, not just flashy marketing. Treat this as a moonshot, not a core holding. It's a high-risk, high-reward play that should only be a small part of your portfolio. Only invest what you're willing to lose. Protect your capital, and don't let FOMO drive your decisions. Let's shift gears to something more established: Wolfspeed. Wolfspeed, ticker Wolf, is a global leader in silicon carbide and gallium nitride semiconductors, two materials that are absolutely essential for the next generation of electric vehicles and 5G wireless networks. These advanced chips are at the heart of the technology powering the EV revolution. Wolfspeed's technology makes electric vehicles more efficient, extends their driving range, and helps reduce charging times. At the same time, their chips are critical for powering next-gen telecom infrastructure, enabling faster, more reliable 5G connections. As EV adoption and 5G rollout accelerate worldwide, Wolfspeed's addressable market is set to explode, with demand for their chips expected to surge over the coming years. But the stock's been volatile, hit by industry cycles, supply chain issues, and heavy spending on new manufacturing plants. The company is navigating a challenging environment as it ramps up production capacity. Wolfspeed is burning cash to scale up, betting big on future demand. It's a classic case of short-term pain for the promise of long-term potential, as they invest heavily to secure their place in the market. The thesis is simple: if Wolfspeed's massive investments pay off, they'll dominate a critical tech niche for years to come, shaping the future of both transportation and communications. But competition is rising. Other chip makers are racing to get in on the action, and the battle for market share is heating up. Wolfspeed must keep innovating to stay ahead, pushing the boundaries of what these materials can do. If you're a long-term investor who believes in the future of EVs and 5G, Wolf's recent pullback could be a compelling buying opportunity. Expect volatility and be patient. This is a multi-year story, not a quick trade. The road ahead will have ups and downs. Before buying, listen to their earnings calls and check their supply deals with automakers. These partnerships are crucial for long-term growth. The story matters more than the current numbers, but make sure the story is still on track and management is delivering on promises. This is a strategic bet on the future of technology, with the potential to reshape entire industries. Don't expect overnight gains, think 5 years out, and be prepared for a bumpy ride along the way. If you want exposure to the EV and 5G boom, Wolfspeed is a strong candidate to consider for your portfolio, but always watch the competitive landscape, as the semiconductor industry can shift quickly. Let's move to our next pick: Elong Power, another company aiming to shape the future of energy and technology. Elong Power Holding, ticker ELPW, is a Chinese lithium-ion battery maker serving everything from e-bikes to portable power stations. Demand for batteries is booming, and Elong Power targets smaller-scale applications, a smart niche away from EV giants. But investing in Chinese stocks brings extra risk, geopolitical tensions, regulatory uncertainty, and less transparency. US-China relations can impact stock prices, and accounting standards may differ from what you're used to. Fraud and delisting risks are real. This is the China discount. ELPW is a small cap, so expect volatility and liquidity issues. Scrutinize their financials. Is revenue growing? Are margins healthy? How do they stack up against fierce competition? Hundreds of battery makers compete in China. What's Elong Power's edge? Technology, efficiency, or customer relationships? The stock may look cheap, but that reflects real risks. For most investors, the headaches may outweigh the rewards. If you're considering ELPW, be ready for company, industry, and country-specific risks. Do deep due diligence, verify everything you can. There are safer ways to play the battery boom, like larger manufacturers or raw material suppliers. ELPW is a high-stakes bet for those with high conviction and risk tolerance. If you're not comfortable with uncertainty, look elsewhere. Let's wrap up with our crypto picks. Stafi. Stafi, ticker FIS, is a DeFi protocol solving a real crypto problem. Staked assets are locked and illiquid. Stafi lets you stake coins and receive liquid R tokens in return, so you can earn rewards and still use your assets elsewhere. This boosts capital efficiency and unlocks billions currently stuck in staking. But Stafi faces stiff competition. Lido dominates liquid staking, with others like Rocket Pool in the mix. For Stafi to win, it needs a compelling edge, better returns, safety, or unique features. The FIS token's value depends on protocol adoption. It's used for governance, fees, and network security. Risks? Plenty. Smart contract bugs could mean total loss. Audits help, but don't eliminate risk. Can Stafi take market share from giants? That's the big question. Like all altcoins, FIS is tied to crypto market cycles. Bear markets can crush prices, no matter the fundamentals. If you believe in proof of stake and liquid staking's future, Stafi is worth a look. Its small market cap means more upside if it succeeds, but also more risk. Before buying, use the protocol, join the community, and study their roadmap. This is a speculative bet. Don't go in blind. Only invest what you can afford to lose. Let's wrap up with some final thoughts. And to sum up, MBIO is a high-risk biotech gamble. ASST is a speculative play on the metaverse. Wolf is a long-term bet on EVs and 5G. ELPW is a risky Chinese battery stock, and FIS is a DeFi moonshot. Each has big upside and big risks. None are for the faint of heart. This video is for informational purposes only. Do your own research and consult a professional before investing. Know your risk tolerance and never invest more than you can afford to lose. Thanks for watching. If you found this helpful, hit like and subscribe for more deep dives. Drop your thoughts in the comments. Are you buying any of these? Agree or disagree with my takes? Your feedback helps shape future videos. Stay smart, stay curious, and I'll see you in the next one. Thanks again for watching. See you next time.